Okay, now we move on to business income. Okay, what is business income? Under this topic, we will cover definition, ledgers of trade, derivation, capital, and versus revenue income. Okay, let's look at the first part. Okay, preferential treatments for section 4A. So these are the special treatments given to business income. Okay, for business income, there are two things that it can actually benefit. Number one is losses. Number two is capital allowance which incurred due to assets or capital expenditure that they already incurred in the beginning. Okay, for losses, okay, if we refer to number one, utilization or unabsorbed losses can be carried forward forever until you permanently close your business. Okay, because if you temporarily close your business, you can still claim your capital allowance. Your losses. Okay, the next one is the capital allowance on plant and machinery and industrial building. So normally for the business, they incur substantial amount of money for their capital assets or capital expenditure. However, from the tax point of view, when they compute their chargeable income, this expenditure is not deductible. Okay, therefore, it will only deductible under capital allowance scheme. And then for the capital allowance, the same thing, you can carry it forward forever until you permanently close your business. However, you cannot take capital allowance from business income 1 and then you settle against your business 2. And then the next one and the last one is the current year business losses. Okay, in the earlier slides, I already mentioned to you, if you have any current year business losses, it can be further deducts against your aggregate income. So meaning if you have other income like employment income, dividend income, interest income, it will further reduce your income. Okay, aggregate income therefore means it will be lesser income, lesser tax. Okay, so that's why we always encourage if you work full-time and then you do business part-time, set up a business entity like enterprise whatsoever, and then do your claim, alright? Declare your income, declare your expenditure. Then if you have losses, it can be set off against your aggregate income. Okay, let's look at the definition of business income. Okay, definition of business income under section 2 of the ITA. It mentions business include profession, vocation, trade, manufacture, and adventure. Okay, what does it mean? Okay, profession is actually referred to professional practices such as lawyers, doctors, okay, architect, engineers. Normally, in order for them to offer their services, they will set up a business entity, alright, and then they sell their know-how and their expertise. And normally for this kind of job, okay, or this kind of activities, whenever you sell your services rendered or know-how or your expertise, you get income, isn't it? Therefore, that income normally will be treated as a business income. Okay, the next one is the vocation. Okay, vocation is actually referred to repetitive or routines that people do. Okay, because some people, their routine is that every day or every weekend they will go to the clubhouse or resources. Okay, and they bet. Okay, they do betting. So if they have income, so that is actually their income. So for them, it is actually their routines. Okay, therefore, in this matter, okay, whatever income that they generate from this kind of activity, alright, can be treated as a business income. Okay, the next one is trade. Okay, so trade is actually referred to trading activity when you have buy and selling activities. Okay, so you can refer to page 202 of your textbook. It does mention that trading would include certain features such as buying and selling, series of transaction. Okay, you have repetitious activities. Okay, so again, normally we use badges of trade. Okay, in order to do some exit test for certain scenario based on the facts given. Okay, the next one is the manufacture. So what is manufacture? Manufacture is when you transform your raw material into a finished good. Okay, you transform your raw material into finished good. So whenever you do that, you would go through certain conversion where you have other materials included some processes have and incurred some expenditure and so on. So and then after that you dispose your products that you have. Okay, because normally you produce in many. So for this kind of activity, whenever you sell your finished good from the production activity just now, so that business income can be treated as a business income. And lastly is adventure. Okay, adventure is actually referred to isolated transactions. Okay, isolated, it can be one-off transaction, never occurred before or maybe in future. However, that single transaction can be called under business income. Okay, so that's why it's very important to know the badges of trade and how to determine whether the income is a business income or not, depending on the specified criteria. Let's look at number one. Number one is talking about subject matter. Okay, subject matter is actually referred to the subject itself. When you have that particular subject, what is the purpose of you having that? Okay, is it because you want to have personal enjoyment or is it because you want to generate income? Okay, for instance, okay, you buy paintings. Right, so normally people buy paintings because they want to hang it on their wall at home, and then they just want to enjoy by looking at that particular painting. Okay, so meaning that, in other words, when they buy the painting, is actually for them to enjoy. Okay, to have personal enjoyment from that particular item. Okay, however, sometimes you might generate income by selling your painting. So now the question is that income is a capital income or is that a revenue income? Therefore, it will be taxable under section 4A. Okay, so most of the time, if you fulfill the criteria of you want to have for personal enjoyment, okay, therefore it will be more fit into capital gain. Okay, otherwise it will be taxed under section 4A. The next one is the period of ownership. Okay, period of ownership is actually referred to, is it a short-term hold of the assets or long-term hold of the assets? Okay, the longer you hold, the more it will be capital gain. The shorter you hold, the more it will be revenue in nature. Okay, or business income. Why? Because as a business, you will not keep your stocks forever. It will be obsolete, isn't it? So you always want to replace your asset and get new one and then replace again and so on. So you want to rotate your assets very quick. So that's why if you hold at least 5 years and above, okay, therefore it will be more treated as a capital gain. Okay, and then the next one is the formation of company. Of course, it's a clear cut. If you already set up a business entity, okay, therefore whatever business income that you have will be taxed under section 4A. And then frequency of transaction also will depends on the number of frequency of transaction. The more you have, the more it will be lead to business income. And then attention to the property. Okay, what do you do with the property in order to make people realize that you actually have something to sell? Okay, for instance, you have 10 acres of land. Okay, you did nothing and then you dispose. Okay, but sometimes you notice that it's not that easy to dispose 10 acres of land. So what do? You break it out into small pieces of land. So if you do that, okay, and then after that you dispose that particular land, therefore that disposal money that you receive or proceeds that you receive can be treated under section 4A. Okay, the next one, number 6, is the circumstances to realize. Okay, that means what is the underlying reason for you to dispose your item or your product or whatever your assets and so on. Okay, here is mentioned here, if let's say you dispose because you are in emergency need of money, therefore in that matter it will be not treated as a capital gain. Okay, however, if let's say you actually want to keep it for a shorter term and you want to rotate your assets, alright, so that one is clear cut. It will be taxable under section 4A. Okay, the next one is intention. Okay, what is your intention of having that or purchase that particular material? Is it because for you to keep it long term, or is it because you want to keep it for a shorter term? Okay, so the shorter it is, the more it will be individual income compared to capital income. Okay, methods employed in disposing of property. Okay, so if you know, look at the business, if they want to dispose your product, what they will do? They will do a lot of marketing activities, isn't it? So they do something, okay, to encourage or to let people know what actually they are selling. Okay, so if you have that kind of activity, proper set of activities, therefore it will be non-taxable. Okay, but if let's say it is ad hoc basis, therefore it will be more treated as a capital gain. And then the next one is the financing arrangement. Okay, financing arrangement refer to whether you have been financed or not. Okay, for instance, you you want to purchase your capital or your assets. So for the financing arrangement, if you have set up a loan, okay, in order to purchase your assets or your working capital and so on, so it will be more treated as a business income, or otherwise it will be treated as a capital gain. And then finally, if you have accounting evidence, okay, definitely it will be treated as a business income. Okay, the next one is the derivation of business income. Okay, we want to know whether that business income is actually derived from Malaysia or not. Okay, the first one we look at section 12, subsection 1, subsection A. Okay, here it mentioned that gross income is not attributable to operation carried on outside Malaysia. So that's why if you recall, we define the scope of Malaysia. Okay, and now we define whether that business is actually having their services or product landed here. Okay, so we want to know whether is it a Malaysian source or is it foreign source. Okay, how do you want to know? Number one depends on where the contract is being concluded. Alright, because let's say you have your HQ here, but you conclude the contract when you go overseas. So in that manner, you might be caught, okay, under two circumstances, perhaps in that country and also in our country. So that's why double tax agreement comes into picture. Okay, and then we also look at where the stocks are being maintained. Okay, sometimes what happens is that you have your stock maintained in China. So customer call you, order, and you instruct people from China to send it direct to the whoever the buyer. Okay, so it's not even passed to Malaysia. Right, it's not even passed to Malaysia. So here in these circumstances, here we want to see where the stocks maintained and when or where you pass your ownership. Alright, because we want to know whether it happened in Malaysia or outside Malaysia. And then we also want to know whether the services rendered in Malaysia or the proceeds received in Malaysia. So from there, we can actually determine is it derived from Malaysian source or not. Next one is the 12.1b, which is transaction must be revenue in nature. So the gross income or the sales value must be equivalent to the sales value or sales proceed, or perhaps market value. Okay, so depending on which one actually you use. Okay, the next one is the gross income from other sources of income. So if you recall, other sources of income, alright, will be assessed in accordance to the basis here for that particular entity. Okay, so if you are a business, therefore you follow financial year. If you are individual, therefore you follow calendar year. Okay, and last but not least is section 12, subsection 3, which is talking about place of business. Okay, for the place of business, what happens is that for the company, or for the business, there are many ways for them to set their presence in Malaysia. Sometimes through branches, sometimes through office, sometimes through agent. So normally income tax will also see the place of the business. Okay, establishment. Do you have permanent establishment or not? So from this, okay, based on the scenario given, we can actually decide whether the business income is actually derived from Malaysia or not. Okay, apart from that, when you have business income, you also want to refresh back. Okay, we have to know commencement date of the business, because whatever prior to commencement might be non-deductible. Okay, especially for the revenue expenditure. And then for the cessation, you must also know you have two types of cessation: permanent cessation and temporary cessation. Okay, so you want to know if it is temporarily, you still can continue claiming your losses, your capital allowance, but if it is permanently closed, therefore your losses, capital allowance cannot be carried forward forever. Okay, the next one is the capital and revenue nature. So we want to know, because normally if it is capital in nature, it is not taxable. If it is revenue in nature, normally it will be deductible. And finally, we want to also to know how to split, okay, the two sources of business income if you have two separate income, okay, business income. All right, so that's all with regard to